What really happened in the markets during the last week? Well, that's why you got me. I have the investment report prepared by the investment team at Cytonn. We are going to dive into the fixed income, equities, and real estate and other highlights. So let's dive right into it. Right into the fixed income market, we had the T-bills undersubscribed for the first time in 2 weeks, with the undersubscription rate coming in at 76.8% in comparison to last week oversubscription rate, which was at 138.1%. When it comes to the 364 and 182-day T-bill, the subscription decreased to 54.5% and 100.3%. The government accepted a total of 18.1 billion bids against the 18.9 billion bids that they received. This translated to an acceptance rate of 96.2%. During the week, the CBK also released auction results for the reopened bonds, that is FXD1/2018/015, which has a maturity of 8.3 years with a fixed coupon rate of 12.7%, and the other reopened bond was FXD1/2022/025, which has a maturity of 22.7 years and a fixed coupon rate of 14.2%. The bonds were oversubscribed, with the oversubscription rate coming in at 196.7%. The government received a total of 59 billion bids against the 30 billion bids that they had offered, and they accepted a total of 48.5 billion bids. This translated to an acceptance rate of 82.2%. During the week, EPRA also released their monthly statement. We had the super petrol, diesel, and petroleum increased by 0.2 shillings, 2 shillings, and 3 shillings respectively. During the week, the Treasury also released their budget policy statement draft for 2025, which mandates the Treasury to incorporate stakeholders' views during the preparation. The draft will later be taken to Cabinet for approvals and subsequently presented to Parliament for discussions and adoption. The budget projects an increase in revenue from 3.1 trillion to 3.5 trillion, while the expenditure is projected to increase from 3.9 trillion to 4.3 trillion. And when we move to the equities had a mixed performance. We had NASI and NSE 25 gained by 0.9% and 0.1%, while we had NSE 20 and NSE 10 lose by 1.2% and 0.5%. This was mainly driven by gains in large cap stocks such as Safaricom, Bamburi, and Equity Holdings, while it was weighed down by losses of large cap stocks such as SCBK, Stanbic Bank, and Absa. In the real estate side of the market, we had China Square expand by building their 7th store in Greenspan Mall, which is located in Donholm. We had NSSF announce plans to build a mixed-use development in their 3.8-acre land located in Nairobi CBD along Uhuru Highway and Kenyatta Avenue. For the focus of the week, the team prepared a report on restructuring and insolvency in the country. The report highlights the Insolvency Act, case studies, recommendations, and conclusion. As we have seen with the market insights, the updates are being given on T-bills, bonds. So if you are looking at it, the most viable investment tool or investment that you can make right now is a money market fund, which usually invests in T-bills or commercial papers. So we have the top 2 money market funds being Cytonn, which is offering a rate of 16.6% currently, and number 2 is coming at Gulf Cap, which is offering 16.3%. So it'd be nice if you took a look at money market funds. A big thanks to the investment team for preparing the report. Until next time, my name is Ngeo Muthoni.